News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moskow.
Karen, we begin with the new salvo in President Donald Trump's global trade war. So-called reciprocal tariffs are now in effect for roughly 60 countries, bringing duties around the world to levels that haven't been seen in a century.
They've ripped us off left and right. But now it's our turn to do the ripping. That's okay. We're going to make our country even stronger than it ever was.
Speaking at a Republican fundraising event, President Trump said tariffs are already bringing in $2 billion a day, and he said they're leading to negotiations. The president says he had a great call yesterday with South Korea's acting president. He also spoke this week to Japan's prime minister, who urged the president to reconsider.
Well, Nathan, Asian nations are bearing the brunt of the new tariffs. Cambodia is now under a 49% tariff rate. Vietnam's is 46%. But China is taking the hardest hit with duties on top of existing tariffs running as high as 104%. President Trump says that'll force Beijing to the table.
They don't want tariffs on themselves. And it's very simple. We're making deals and people are paying tariffs. Countries are paying tariffs. Right now, China is paying a 104% tariff. Think of it, 104%.
And President Trump said he won't stop there. He says he'll announce tariffs on pharmaceuticals very soon. He's also threatened other sectoral tariffs on lumber and semiconductors.
Well, so far, Karen, China has not immediately responded to the new tariffs. That's a departure from the last two episodes when Beijing hit back within minutes. For more, let's go to Hong Kong. Check in with Bloomberg's Jill Deesa. So, Jill, what is the latest?
Good morning, Nathan and Karen. Yes, so far we have not really seen any kind of drastic measures out of China. It's really been radio silence. All we've really seen from Beijing is they've released a short white paper on trade with the United States. But this does stand in pretty stark contrast to just earlier this year when there were earlier levies that Donald Trump implemented on China. We saw immediate responses in the form of additional retaliations that came with some tariffs on American goods that were sent to China, that also came with some other punitive measures, such as investigations into various American companies that do some operations in China. That doesn't mean, though, that China isn't going to respond. Remember, we did see over the weekend when that initial 10% tariff went into effect that China came out with its own duties on the United States. That's, of course, what led to this massive escalation, leading to that total number of 104% that Trump has implemented in tariffs on China. So it could be that China is kind of biding its time. Maybe it'll come back with something else. We've also heard there's been some reporting that some within Chinese officials are meeting to talk about some economic measures that they could take to sort of bolster the economy right now. Obviously, all of that coming against the backdrop of tariffs. We'll have to see what continues to come just over the coming hours, if not days and weeks. In Hong Kong, Jill Deesa, Bloomberg Radio.
All right, Jill, thank you. Now let's head to Europe, where stocks are selling off on the Trump tariffs. And Bloomberg's Ewan Potts joins us in London with the latest. Good morning, Ewan.
Karen and Nathan, after yesterday's bumpy session in Europe, which saw stocks gain before a late sell-off, the direction of travel so far this morning is very clear, and it is down. Only 16 of 600 shares on the benchmark Stoxx 600 in the green today, with the index currently down 2.7%. All 20 industry groups lower, with healthcare stocks the worst performers, off more than 4.5%. Energy and real estate also underperforming this morning. Looking across the region, the Swiss market at the bottom of the table, it's currently down more than 4%. Live in London, I'm Ewan Potts, Bloomberg Radio.
Ewan, thank you. Here in the U.S., futures are mixed. Dow futures lower, NASDAQ futures higher. That puts S&P futures right in the middle. But that follows yet another turbulent session on Wall Street. For 4 straight sessions, we've seen moves of at least 4% from peak to trough. The S&P 500 is down almost 19% from its February record, posting the worst 4-day run since March 2020.
Well, Nathan, we are seeing major movements in the bond market once again this morning, and we bring in Bloomberg's John Tucker for the very latest. John.
And Karen, treasuries, which are supposed to be the safest and most liquid assets, they're selling off. And when the prices go down, the yields go up. Calvin Yo, money manager at hedge fund Blue Edge Advisors, says this is a fire sale of treasuries. He adds it's like ice sculpting in a forest fire. Grace Peters at J.P. Morgan Chase sees it this way.
what the market is digesting this week is that tariffs are not going away and volatility is likely here to stay.
U.S. government bonds may be losing their safe haven status over concerns the trade war will trigger stagflation. Hedge funds may be unwinding a popular leverage trade, and investors may just be dumping whatever they can to get cash. That could signal liquidity concerns, and that's never a good sign for markets. Some investors also speculate that global reserve managers like China could be reevaluating their positions in U.S. government debt. In the U.S. right now, the 10-year is now 10.30 in price. That is pushing the yield up 4 basis points to 4.33. In New York, I'm John Tucker, Bloomberg Radio.
And that's news when you want it with Bloomberg News Now. I'm Karen Moskow.
I'm Nathan Hager, and this is Bloomberg.